Hello and welcome to Hot Money on Bloomberg Quint Live. Before we start with Hot Money, let's shift focus to earnings. The June quarter has been a dampener for Mindtree. The margin drop has been more than expected and the company's profitability was hit mainly due to a hike taken because of the wage bill. Moreover, the management is confident that profitability will improve for the full year. Bloomberg Quint's Nishant Sharma caught up with the Parthasarathy N.S, COO of the company, to find out the growth strategy and more. Here's a slice of that conversation.
I think our focus in terms of digital and investing in the right technologies has paid off. I think with the right kind of technology and the skills that we have, expertise that we have, the reskilling approach that we have taken is resulting in a lot of trust that the customers have in terms of giving us much more impactful projects, and that has led to the growth, number one. Number two is actually some of the large deals that we won a couple of quarters back. I think they've all fully scaled up, and that also resulted in significant growth in this quarter.
Right. After many years of wait and watch mode in the BFSI segment, and industry is seeing a recovery. What kind of traction you are seeing there, and do you think the momentum will continue for a while now?
I believe it's still early stages for us to conclude that the recovery is on fully. It's a wait and watch mode continue for us. But I think we are fairly confident in the limited space that we are in within the BFSI, especially in the insurance space. I think we will see a growth going forward in this year itself.
Right. And how would you peg the performance of traditional run the business to the new wage businesses?
So I think we want to focus on both. Obviously, there is a significant investment that we have to make in digital because these are some of the newer technologies. But if you look at customer spends, it happens in both the run the business as well as grow the business. And I think we will continue to focus on both. If you look at this quarter specifically, about 47% of our revenues comes from digital, and digital is growing it faster than Mindtree. At the same time, if you look at the traditional services, whether it is testing and automation testing, as well as infrastructure businesses, both of them have grown by upwards of 10%. So I think we want to continuously focus on both because both are explicit needs that the customers express in us.
Right. You mentioned about the revenue. Majority of the revenue continues to come from the top clients. What is your outlook on client concentration?
No, I think we are very, very mindful of the fact that the client concentration is a concern many people have expressed. But we come with a lot of confidence for multiple reasons. One, all the renewals that we have had with the top client is backed by very solid delivery that we have done for many years. Number one. Second is we are in the sweet spot as far as the customer is concerned in terms of the kind of work that we do. Third is actually we are spread ourselves into multiple business units within the organization, and that's a large customer. Having said that, I think our revenues from the top customer is still much, much smaller compared to many other players who are in the same customer base. So I think we are confident that we'll continue to have growth in the customer. At the same time, we are also mindful to ensure that we want to grow the top 2 to 20 customers as well. If you look at this quarter, the top 2 to 20 customers have grown pretty well, and we will continue to focus on growing that as well.
Right. And what about diversification of your client base so that you're not dependent on top clients for the revenue growth?
And that is a focus that we are doing on the 2 to 20 customers. 2 to 20 customers, we are trying to invest significantly in terms of finding out right opportunities, having the right kind of people, and ensuring that we understand the pain point of the customers, and then so that you get opportunities to work in the space.
Right. And what about the emerging verticals like travel, hospitality, manufacturing? What's your outlook for that? And what kind of conversations you're having with the clients?
I think this quarter, we have seen good progress in every vertical. So I think there are investments that we have made both in digital as well as in the domain. I think that's paying off. So we will continue to focus on that. I think one of the things we strongly believe in, we are in few verticals, and I think we believe strategy is all about having a focus. And we are focused on these 4 verticals, and we'll continue to invest in these verticals. And I think it will pay off for us in this year itself.
Okay, let's start with Hot Money. Let's welcome our experts then. Chokkalingam of Equinomics Research and Advisory, Amit Mantri of 2.2 Capital, and independent market expert Shahina Mukadam joins us on the show. Thank you to all for joining me. Today on Hot Money, we'll discuss stocks like Bandhan Bank, Ashok Leyland, Mindtree, and we will also discuss some attractive bets that our analysts up there, experts are betting on. Let's start with the first one, and that is Bandhan Bank, trading at record highs, recently listed, but extremely strong set of numbers by the company. It's up another 4% in trade today. What do you make of the first quarter numbers of Bandhan Bank, and what's the outlook ahead? We'll ask our expert. Shahina, I'll start with you. What did you make of the numbers that came yesterday?
They were very strong numbers. I think we've 45% growth in in profits despite increase in provisions is, I think, a commendable number. And I think now, it's growing in size with over 32,000 loan book. I think it's coming to a substantial size. Of course, the numbers are coming on a low base. So incrementally, I don't think we are likely to see such strong growth numbers. May not see such growth numbers. So I think that is a negative. Also, in terms of valuation, I think at 7 times price to book, it's not cheap or anything. But at the same time, I would be buying it if I'm buying it for the long term. I think in the medium term, it should consolidate. But still, I would be a buyer with the prospects for microfinance remaining pretty strong and them moving into universal banking. That should be a slight, it should take them time to actually grow in that business, but I think it's a long-term positive.
Okay, long-term bet is something that Shahina is taking. Mr. Chokkalingam, what's your view on the numbers and valuations?
I mean, numbers are great. The valuations are greater.
Okay.
Price to book value 7.3 times. The whole financial banking sector now has as much as 30% weight. So historically, that's what happened. Even pharma had a huge weight, then it crashed. Even the IT sector at some point in time, they crashed the weight. So even in the large cap space or in a thematic space, you see the sector rotation. So this is not sustainable. As she was also saying, on a lower base, they have done well. But as the base keeps growing, it's going to have a definitely difficulty in maintaining this kind of growth momentum. So I would not buy at 7.3 times book value. The trick behind this abnormal valuation is that, if you look at the retail float, which is only 2%, promoters have 82%, then institutions have about 18%. What is available in the market is a very thin retail float. That itself is a dangerous thing in the long term.
Okay, so that's the view on Bandhan Bank. And Amit, what did you make of the numbers? Do you have a view on Bandhan Bank?
Yeah, so numbers are clearly very solid. They've reported a fair bit of earnings growth, as well as the loan book has also increased significantly. So I don't think so there's anything much to complain about in the terms of the numbers. Yes, as other experts have pointed out, the valuations are quite rich. But when I look at valuations in terms of the ROE of the business, this is a bank which has the highest ROE in the entire banking sector. Even the likes of HDFC Bank does not have the kind of ROEs that Bandhan is reporting. Even now, 20% ROEs, despite the fact that it has done a massive capital raise in the IPO. In fact, before the IPO, it was actually doing around 27-28% ROE. So when you have a bank with that kind of ROE metrics, as well as good loan growth, even 7 times price to book is not that expensive actually. But what worries me most about Bandhan Bank is the growth in loan book, which is unsecured. MFI tends to have idiosyncratic risks. Rapid growth there is not that great, I would believe. Okay, so we'll discuss Bandhan Bank in more detail at this point of time. Amit, your time was up, but you can continue what you were referring. What's the concern that you pointed out? So, if you look at the rapidly growing microfinance businesses, they tend to have few years of extreme growth, 50-60% growth per annum, and then suddenly when there is a road bump, there tends to be massive provisioning, massive credit costs that the businesses have. We have seen that happen with the likes of SKS. We have seen that will happen in the demonetization with a lot of other microfinance institutions. Some of the larger unlisted players like Janalakshmi almost went under because of the rapid growth that they were having, and then they were not able to manage the credit costs later on. Okay. So I would worry about this kind of rapid growth because it's now a sizable loan book. It's no longer small that they can keep growing off a small base. 30,000 crore is a huge loan book now in the MFI space. Okay. So you'd be slightly cautious on Bandhan Bank at this point? Yes, yes. But again, I'm saying if they're able to manage the asset quality, these valuations will appear to be significantly cheap over the long term. Okay, so that's the view. Mr. Chokkalingam, you spoke about valuation, but that's the big gap. You have your PSU banks and the smaller private banks which are available at throwaway valuation, but no one wants to buy them. And on the other hand, you have these very expensive quality names which everyone wants to buy. So what should one do in the banking space then?
No, definitely one should not be carried away by the valuation or run up on the stock price. As I was discussing, only 10 large cap stocks have participated in the whole rally. And if you see the theme, only the banking and finance, small bank, they are participating, FMCG. It's very risky. The sector rotation will happen. The smart fellows sell when they are very costly and buy things are cheap. Instead of buying this bank at this valuation, I would buy something like Indian Bank, which is available at a less than 2 times price to book value. It is one of the best PSU banks in terms of asset quality, business growth. So I'm sure in the medium to long term that will outperform Bandhan Bank.
Okay, so that's the view that's coming in on Bandhan Bank at this point of time. Valuations obviously expensive, but we need to do a wait and watch before and see whether the numbers are coming out before you should take a call on Bandhan Bank. The next stock we want to talk about is Ashok Leyland. Numbers coming out, they were in line with estimates, but the other whammy that came out was this entire thing with the new Axel norms that came out, and that's why the counter was down almost 10% in trade today. It's still falling in trade, but what's the view on Ashok Leyland going ahead? We'll ask our experts. Mr. Chokkalingam, the numbers and the impact of this new norm, how do you place Ashok Leyland into the entire scenario now?
Unfortunately, Ashok Leyland will be the maximum, it will take the maximum hit compared to other companies, because that 16 tonnage accounts for 39% of the total volume. And India, we know, the regulators themselves allow overweight. So definitely. And third, if you look at last 3-4 years, the commercial vehicle sales were substantially growing. The base of the sales has become very big. Now, if you look at last 20-25 years, the commercial vehicle always remained as a cyclical business. Every third, fourth year, it used to fall very badly. Now, after the correction in terms of valuation, it looks very attractive, 13 times FY 2020. But I would still suggest wait for some clarity, because, as I said, perhaps this regulation might lead to a cyclical downside for the whole industry, within 12 months. So therefore, one has to wait and watch.
Okay, wait and watch approach. Amit, what did you make of the numbers in the new norm? Is it very risky? Will that the stock has fallen? Is it factored in now, or do you see more pain for Ashok Leyland?
No, so the Axel norms for me actually are immaterial, really. We have had a lot of discussion around the Axel norms, whether they are positive, negative, whom do they impact more. The way I look at it, these norms only have an impact on short-term volumes. When I say short-term volumes, maximum for 12 months kind of it. The rest of the volume trajectory of the CV business will be taken care of by the CV cycle. A 10%, 20% change in the loading factors don't really impact the volume significantly. So I think 6 months down the line, we will not be discussing the Axel norms at all. We'll be talking about the CV cycle, whether it's going to continue its uptrend or whether we now start seeing a decline. So for me, the bigger concern is where we are in the CV cycle. It's now almost 5.5 years of upcycle in the CV business. This is clearly a cyclical business. Profits don't just go up one way. They also go down when the CV cycle turns. So I would more worry about whether valuations are cheap in comparison to where we are in the CV cycle. Okay, so that's the view, interesting view. I'll come back to you. And Shahina, you have a minute to your opening statement on Ashok Leyland. What did you make of it?
As a disclosure, I personally hold it. I believe that the numbers, the reported numbers were very good, and the discussion on the Axel, the changes in the the norms that have come out for overloading, I think that will be a short-term impact on volumes. It is possible. Also a short-term impact on margins, because they would have to invest more and to upgrade whatever needs to be upgraded to allow the overloading. But I think it's short-term, and valuations for the medium to longer term still remain attractive. That is one. Two, I believe that next year we would be now talking of newer vehicles that need to be replacing the older vehicles because of change in government policy. Maybe for the change in BS norms, also in terms of older vehicles that need to be junked. So I think to that extent, the CV cycle, I mean, one talks of a 3-year CV cycle. I'm not sure if that's going to be in operation, and a 10% growth for Ashok Leyland does seem definitely on the card. So I would be a hold and buy at every dip. Okay, so that's the view that's coming in on Ashok Leyland at this point of time. In terms of we'll open it up for discussion. In terms of you said that you are invested in it, and so do you believe that the story will continue, or are you bullish on the entire CV cycle or Ashok Leyland as particular? I remain bullish on the entire CV cycle. Here we are talking of more road transportation, better highways, GDP moving up. So I think all these things are going to support the CV cycle. If not, maybe not these type of numbers that we've seen Ashok Leyland report, but definitely are continuing. And it's up for debate whether the CV cycle is going to be continuing 3 years or whether we are going to see a much longer CV CV cycle because there are a lot of change in norms that are happening in a very short term, in short time period. So I think that, and plus in terms of EBITDA margins, if you see the commentary from the management, they are pretty focused on maintaining the EBITDA margins. They are pretty focused on passing on the increased cost both on the raw material front as well as any incremental cost that they may have to bear on change in norms, whatever government policy change in that, whatever be that needs to be done to maintain EBITDA margins. I think that's a positive, and the negative being that they have lost market share in the MHCVs, but to an extent they are gaining it in the LCVs. So I think it's a balance which the management is trying to do, and I would stick with the story of CVs for the longer term.
Okay, Amit, if I got what you said right, you believe that the CV cycle is turning now on the downside now. You believe was that?
No, I'm not saying that it's turning already, but we are already in a fairly long CV cycle. So eventually it will turn because it's a cyclical business. Whether it'll turn within 1 year or 2 years or 3 years, that's obviously up for debate. CV cycles can be 5 to 10 years as well. So, but we are now on this later half of the CV cycle. So I would be more worried about whether we are in the now going to see a flat volumes, single-digit volume growth, or even negative volume growth in the industry.
Okay, so that's the view. We'll move on now because of time constraint to the next stock, and that is Mindtree. Came out with numbers yesterday. Numbers were pretty much in line, but what disappointed was the profit number, which was below estimate, and margin also took a hit. The commentary was slightly cautious, but the management is optimistic that they will be able to make up with the margin. But the counter does indicate a different story. It's 10% down. But remember, the run-up has been stupendous for Mindtree. What's the way ahead for going for Mindtree? Amit doesn't cover, so I'll stick with Chokkalingam. What did you make of Mindtree's number?
A good number, but this was waiting to happen. You know, just if you permit me a minute, to understand the stock, you have to understand the structural change in the equity market. Today, the perception-driven PE, either it rewards you or punishes you more than what the fundamentals deserve. That's why, in my view, Bajaj Finance is trading at 160% of the lending book size, not on profit. And you saw Bakarangi 1% going to 506 above level, then crashing. So both good quality and bad quality stocks, they were rewarded or punished very badly. So in the same way I would put it in Mindtree. It's a great company, good quality, good management. But last year when it was available at 438, there was no taker. Same stock went to nearly 1100 at 33, 35 PE, as if the whole IT industry has turned around to a super double-digit growth. So that's why it's crashed. So I would be comfortable. Even now, it is still valuation is stretched. It is trading at a 2.4 times enterprise value to annual sales. There are companies like Persistent, Scient, they are trading at 1.8 times. Even if you go by PE basis, it is much costlier. So I would consider to accumulate only if it falls below 800.
Okay, below 800. And Shahina, what did you make of Mindtree's number?
The numbers were mixed. Actually, I think on the top line they did pretty well, both on YOY basis as well as on QOQ basis. So I don't have concern on that front. But I think the margins are taking a hit. Margins were soft, and I think the reason why the stock is taking a hit is less to do with the numbers and more to do with the valuations. I totally agree with Chokkalingam that the valuations, if you compare it in the mid-cap IT bracket, it's pretty steep. So based on valuations, and so when the valuations are expensive, any negative news, which I think is maybe in the margins, PAT lower, the stock takes a beating, which is what is happening. So I would maintain a neutral. I think the stock has had a nice run up, and we may see a long period of maybe 6 months where it will consolidate.
Okay, so just to point out, Bajaj Finance numbers are out. It's down 3%. Numbers in line with estimates. It's coming at 834 crores versus our poll of 841 crores. I don't have any other information, but the counter seems to be down in trade post the numbers meeting estimates. I don't know of the asset quality. I don't know of the NII at this point of time. We'll try to get in more details that probably will come in, but it's taking a big beating now. It's down almost 3.5% in trade. So we'll try to get in more details. We'll try to get Shraddha, who tracks the company very well. It's continuously falling. So Bajaj Finance, I think one of the counters that we have discussed so far, it's a story of valuation versus growth. Most of the time people chose growth, but I think this time valuation may be catching up on Bajaj Finance. NII at The NI has also come in much lower than what the street was anticipating. So it's a number that's not met the street estimates at this point of time. We'll try to get in more details, but we'll move on to the next part of the segment. We've asked our guests to recommend one stock they believe that should be bet on, at least in the medium term. So we'll ask our guests that. Amit, I'll start with you. Which is the stock that someone wants to hold in for a slightly medium term or a long term? Which one should they bet on?
So one company that we have been betting fairly aggressive over the last few months is Muthoot Finance.
Okay.
It's India's largest gold finance company, generates an ROE of 25% despite having only 3 times leverage. Gold lending is a category where there has been almost negligible incremental competition. In fact, you have seen players leave the industry. So there are very little NIM pressures that exist in this industry, unlike say a housing finance, microfinance or consumer durable lending. So, Muthoot right now is available at less than 9 times trailing earnings.
Okay.
So the valuations are throwaway. They assume that NIMs will compress significantly or asset quality challenges will exist. This company has barely had any credit costs and asset quality has always been fantastic. So this is a company that we like. We think will deliver fairly decent returns over the longer term.
Okay, so Muthoot Finance is something that Amit is recommending at this point of time. Mr. Chokkalingam, which is a stock that you like?
Yeah, I would recommend Nesco. Just as a disclosure, my company also invested recently.
Okay.
I consider this as a solid wealth creating stock. Strong balance sheet, good management, with a long history of consistent performance. And the story is basically on the land bank and also the service segment in which they are operating. They've got about 70 acres of land in Mumbai, out of which in my estimate at least 35 acres is a surplus land bank. Now the company has got nearly 500 crore of cash, debt-free company, and trading at 19p on trailing earning. And the business model is that it is based on the exhibition, IT parks, which are all the rental based, inflation sensitive. As inflation increases, the revenue increases. So there is a huge unlocking potential. The company also diversified into food courts. They are planning to get into 5-star hotel using all the land bank.
Okay.
So the land bank will remain as a cash cow for adding more and more top line to bottom line in the future. Okay. So therefore I consider a strong way.
Okay, so Nesco is the stock that Mr. Chokkalingam is saying. We just need to take a detour. Bajaj Finance is down now 5%. Shraddha has analyzed the number. Shraddha, very quickly, what did you make of the numbers?
So Darshan, the numbers look in more or less in line with estimates. So I'm looking at the consolidated numbers now because they also started reporting numbers for Bajaj Housing Finance, which became operational in the last quarter. So if I look at the profit after tax, that is coming at 836 crores as compared to an estimate of 841 crores, so more or less in line. The AUM growth has also come in at 35%. Once again, we were looking at a number of about 35-36% sort of a growth. In fact, they've also said that if you adjust for the short-term IPO financing book last year, the AUM growth turns out to be much higher at about 9%. Loan loss provisions came in at 327 crores versus 305, and the gross NPA, more importantly, has come in at 1.39% as compared to 1.48%. So there's actually a marginal downtick as far as the gross NPA ratio is concerned. That apart, the other number that I have is to do with the net interest income for the quarter. I was just looking for that number. But again, the capital adequacy again at 28%. You have, as far as the growth numbers are also concerned, you've seen the consumer segments do a 30% sort of a growth. Rural book has grown by 75%, SME 42%, mortgage lending, which is that Bajaj Housing Finance book, that has also grown by 27%. So from the first looks of it, Darshan, the numbers do look like they are in line with estimates.
Okay, inline set of numbers, it's fallen significantly. Mr. Chokkalingam, you have a view on the numbers that have just come out?
As I mentioned earlier, it's a great company, but the valuations are the greatest.
Okay.
Don't think that, lending business is something like you are running a Google or, there is no strong entry barrier in this country. I mean, population is growing. There are so many people with a lot of money to lend on the institutional side. So it was an absurd valuation, It was valued at 170% of lending book size, not, on the profit. So
okay, we have an analyst joining us. Kajal Gandhi has joined us. Shraddha, just take it away.
Hi Kajal, thanks for joining us. I just want your first thoughts on the numbers. They do seem more or less in line with estimates. What's your take?
So largely the growth is almost in line with estimates in AUM at 35%, but I think there is marginally lower NII as it is appearing. That estimates were on the higher side. Even for us, it was on the higher side. And bottom line is also marginally 20-30 crore below what we would have estimated. But still, the PAT growth is extremely high versus anybody what would have expected. So overall, considering the company, the growth at this level to sustain is also a good, commendable task. We have to see the breakup further. We have not been able to see a lot of data yet, but there is a marginal dip in provision coverage ratio. It seems that based on ECL, some more NPA would have got recognized. And because of that, the extra provision may not have been up to that level. So marginal PCR may have come down.
So, Kajal, the PCR stands at 69%, and they've also said that the gross NPA ratio, considering that ECL method that they had to consider while making the accounts, that has led to the standard asset provisioning to rise by 89 basis points. But despite that, your gross NPA number is still at 1.39%. So that means it's actually improved over the sequential quarter.
So they have done a higher provision on the standard assets, maybe recognizing some slight pain, but then that's not everything must have flown into NPA, possibly.
All right, and we don't really have the breakup of the fee income number, the subvention income, which was again another factor which was expected to be, impacted on account of that in AS. If you've gone through that, or how big of an impact that could have had, if you estimated anything?
No, because nobody had indicated in detail everything, like how things could move there. So I think there could be some amortization of fee-based income. Even on the cost side, I think some amortization, because if not more, they also have a 6 to 9 months to 12 months product. So on a quarterly basis, we may see some aberration, although on an annual basis, things will appear similar.
All right. So, Kajal, at the current sort of valuations, the stock is of course was trading close to record highs yesterday. Does that leave any sort of a room for upside? Because currently the stock has slumped about 3-4% after the numbers came out. Would you attribute that more to profit booking?
This is because if you look at from last quarter to this quarter, there has been close to 600 to 700 rupees rally in the stock, which is from like 1900 to almost 2500. So post results, we can see this kind of small profit booking, and which is healthy for a stock. So we don't see any major negative out of this. It's just a partial part of the business, and also the Ind AS adjustments we will have to see more clearly. It can be also due to that.
Right, and Kajal, just confirming with you, it would be the correct way to look at it would be at the consolidated number, right? Because now they're also reporting numbers for Bajaj Housing Finance subsidiary.
Yeah, true. That will also be there. Correct.
All right.
And also, on an annual basis, we don't think there will be too much of an issue. It can be a 1 or 2 quarter adjustments.
All right, Kajal. Thank you very much for joining us. Darshan, back to you. In line set of numbers, we're probably seeing some sort of profit booking coming in.
Okay, so that's the number on Bajaj Finance. Also pull up Bajaj Finserv, because they get a lot of their valuation from Bajaj Finance. They will also report numbers today, but similar move expected and similar move coming in on Bajaj Finserv also. But we're completely timed out on Hot Money today. Shahina, thanks for coming. Mr. Chokkalingam and Amit, thank you so much for coming on the show today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.